What if I told you that there's a relatively newer income-focused ETF that distributes around 20% yield per year? Now, what if I also told you that this ETF has not only not lost price over time, has not decayed whatsoever, but instead has actually went up just slightly? Now, in this video, we're going to go over exactly which ETF I'm talking about that, yes, yields around 20%, at least as of so far, has not decayed at all whatsoever, and is currently sitting in my portfolio, the portfolio that you see right here. So if you're a dividend income focused investor looking to add a substantial amount of money to your total yearly and total monthly dividends ASAP, then make sure to stick around, drop a like down below, and let's get right into this ETF. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, the ETF that I'm talking about is maybe an ETF that you already know about. Maybe some of you guys actually already have this ETF in your portfolio. This ETF, like I said, is currently in my portfolio, and I'm going to share with you guys how much I currently have, how much I'm currently making as far as income goes, etc. But I'm talking about the Defiance ETF, SPYT, or the Defiance S&P 500 Income Target ETF. Now, this ETF, as you can see right here, does have a monthly distribution frequency, and more importantly, this ETF so far has a distribution rate of 20%. Which is exactly what this ETF is actually aiming to achieve. It says right here, aim to achieve a target annual income of 20% in the S&P 500 using options paid out monthly. The strategy overview is this. SPYT is an actively managed exchange traded fund, or ETF, dedicated to generating current income. Our strategy revolves around holding shares of ETFs that track the S&P 500's performance and engaging in selling of daily credit call spreads on the index. So an ETF that utilizes the S&P 500 and or tracks the performance of it, and along with that selling covered calls or trading options, is really nothing new. There's tons of other ETFs out there that do that, but this ETF actually engages in selling daily credit call spreads, daily being the very important part here, which means in theory there could be a lot more premium to be earned. It says enhanced potential yield. Our option strategy involves selling a call option while simultaneously buying another call option at a higher strike price. That's the call credit spread. By focusing on short-term options, we aim to offer an enhanced, quote-unquote, yield compared to traditional option-based strategies. We're talking about compared to things like JETB or even JETQ. This ETF offers a little bit more involved strategy, which is of course actively managed, and by doing so is potentially going to offer investors, like myself of course, 20% per year as far as income goes, which would be outstanding. It then says income generation. SPYT's investment approach is meticulously designed to generate income through option premiums, derived from selling index call spreads, the primary driver of the fund's yield, that is. So that's where this ETF is going to get most of its yield from. It's going to be from the index call spreads. We sell at the money or near the money call spreads to retain upside growth potential and aim for a target annual income level of 20%. Now there's some nuance here, and if you guys maybe aren't fully versed when it comes to trading options, it might be a little bit confusing here, but basically a lot of these different ETFs out there these days, a lot of these different income focused ETFs that utilize some sort of option trading strategy. One thing I want you to realize, they all for the most part might trade options, but they don't necessarily do so in the same way. And this could make or break the ETF. Like this, for example, they're saying that they sell at the money or near the money call spreads. Now, if they went further out of the money or maybe significantly far out of the money, that could change the entire focus of this ETF, and that would definitely change the entire strategy and the outcome. So I think it's important, especially if you are investing in these different income-focused ETFs, take the time to understand the objective, take the time to understand how the ETFs actually generate income, which I applaud Defiance ETFs for breaking it down here so plain and simple, honestly. Now it then says trading. Each day SPYT sells credit call spreads on the S&P 500, prioritizing options with near-term expiration. This entails selling call options at or near the money strike prices and buying call options above that strike price. Should the S&P 500 value rise above the upper strike price, SPYT stands to profit from further upside appreciation in the index's value. And the cool thing about this daily credit call spread strategy is that there is a lot of upside potential, at least theoretically, because of the purchase call option. But with selling the call, there's also going to be a ton of income generation taking place. Now again, if you guys go through the different videos on my channel, I talk about so many of these different income focused ETFs, of course, throughout the market these days. And this is because I'm so fascinated and so interested in all these different strategies. It truly feels like there's something out there for every single investor, whether you're really seeking capital appreciation or whether you're someone that's really focused on income generation, or maybe you're an investor like me that wants a little bit of both. Now, other important metrics for this ETF. The net assets is 58.31 million, so it's a relatively smaller ETF, although it has been growing, but also the ETF's expense ratio, very important, 0.94%. So this one is going to be expensive to hold on to, but keep in mind, as we just talked about, this strategy is not necessarily simple. It's an actively managed ETF, so if you're in the income focused, dividend focused game, this is something that we're becoming more and more used to. Now, as we also saw earlier, this ETF distributes monthly, which is awesome for investors that want to potentially live off of dividends and distributions in the future like myself. And another thing I absolutely love about this ETF, this is one of the other main selling points for me personally. This might not mean a lot to you, but for me personally, I like the fact that this ETF sort of has a cadence. It pays around 34 cents every single month, or at least has so far. Now, can this go up or down in the future? Of course, I don't know exactly what's going to happen in the future, but at least so far, it seems like for every single share that you own of SPYT, which currently costs around $20 per share, this ETF is going to pay you around 34 cents, which is a massive, massive return on investment. But one of the main things I focus on, especially for these ultra high yielding ETFs, I would say anything that yields north of 10, 12, 14%, with SPYT being in the 20% range, I would definitely consider this ultra high yield. I mean, that's a lot of return as far as income goes per year. The main thing I look for right away is click on the ETF's chart, click on max time frame, and normally you see something trading down and to the right. But in SPYT's case, this ETF has not only traded sideways since inception, which was March of this year, so again, it's only been trading for, 6 or 7 months? But still, over the last 6 or 7 months, we have seen a decent bit of volatility, and although I think it's important to watch names like these over the long term, at least so far, this ETF has held up pretty well, trading not only sideways, but basically exactly where it started trading around 6 or 7 months ago. Now, this is important because even if SPYT traded sideways indefinitely, even if it stayed right at $19, $20 per share and distributed around 20% per year in income, that means that you as an investor would make back all your money in just 5 years and be living off of pure potential income ongoingly. Now, like I said, SPYT has not necessarily lived through a sustained bear market or any sort of sustained market turmoil or volatility, so I do think this, along with a lot of the names I talk about, are probably going to have a day of reckoning if, of course, we see the market tank, but in that case, I'm sure everything else will be trading down with it. But at least so far, over the last several months, this ETF is officially trading basically sideways. But with that, of course, investors have earned around 33 cents every single month since inception for an ETF that costs just under 20 bucks. But you might be asking, what is the real return for SPYT as of this point? And at least over the past 0.59 years, which is how long this ETF has been trading, again, we don't have all that much historical data to go off of, a $10,000 investment into SPYT back in March would have returned $1,203, or around 12.03%, more or less, or around 20+% annualized gain. Now, with dividends not being reinvested along the way, it returns a little bit less, but still honestly pretty impressive, all things said and done. Now, because of what SPYT has to offer and because of the strategy that this ETF uses, on top of the fact that I really want more exposure to the S&P 500, especially with the option overlay, I personally own around 235 shares of SPYT across my portfolios, which isn't, of course, one of my largest positions, but still a sizable position considering this ETF is relatively new, and I normally sort of just nibble on things that haven't been around all that long. Now, I'm hoping to earn anywhere from 20% yield on this one per year, which is the target, of course. Earn that 34 cents per month per share. And for me personally, even if this ETF trades sideways, I'd be more than happy. Now, also with that, in the up and coming months, as things continue to play out, I will probably add more to my SPYT position just because of how well this ETF has done, at least since inception. So now that we went over one of my newest favorite ETFs that not only has had no NAV decay, but also been paying a consistent amount of income since inception, I want to hear from you guys down below. Are you currently holding SPYT, or would you? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.